Everyone, please mute yourself and keep your videos off. It's a request.
Ma'am, we had to fill in some form.
Yes, ma'am. Ma'am, regarding form, no, what like people who have not registered. So what we have done is at the end of this session, when you will apply, you will submit your quiz. So all registration questions are there in that quiz form. So automatically you will be registered.
Ma'am, I have registered already.
Okay, then no issues, ma'am. But then too, who is registered also, we are going to take their details again, because many people have not written their full name, their college shortcut they have written. So for certificate, we need properly. That's why again you have to fill some details which are required.
Okay, ma'am. But that will be at the end of the session.
Yeah, end
right?
of the session. Yes, quiz will be at the end of the session. Yeah.
No issues, ma'am. Thank you so much.
Yeah. Please off your videos, everyone. It's a request.
म्हणजे आपला आवाज गेला पाहिजे. रोग होतो द्या
பாதுகாப்புத்துறை அமைச்சர் ராஜ்நாத் சிங் தலைமையில் மத்திய அமைச்சர்கள் குழு பொது முடக்கத்தை தடுப்பது குறித்து ஆலோசித்து பிரதமரிடம் பரிந்துரைத்துள்ளதாக
Someone with name F868 BBFA, please rename your name, otherwise we will not allow you to join this meeting.
முதலமைச்சர் பழனிசாமியிடம் சமர்ப்பித்தது கூடுதல் தலைமை செயலாளர் கிருஷ்ணன் தலைமையிலான.
Please mute Jaya Chanmani.
மக்கள் நடமாட்டம் அதிகமாக இருப்பதே காரணம் என்று மாநகராட்சி ஆணையர் விளக்கம்.
Everyone, please mute and please off your videos. The request, please mute yourself.
ചിലപ്പോ കൊണ്ടുപോകണമെങ്കിൽ ഇടിഞ്ഞാക്കാരെ ഇഷ്ടംപോലെ കൊണ്ടുപോകും എന്നിട്ടേ ഒരു വീട്ടിലെ കണ്ടേ തവണ 1200 കിട്ടി പുള്ളി അഞ്ചിലോ അരി 5000
ഇന്ന് എല്ലാ ദിവസവും
साक्षी दीदी का बोलो।
color changes to blue. आपके बच्चे रुको 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 हमारी वीडियो को
Good evening, everyone.
Good evening.
Good evening, everyone.
Good evening, ma'am.
Good evening.
Good evening, everyone. We will start shortly. Okay, so at 5 o'clock sharp, we are going to start. Everyone, please mute yourself and keep your videos off for time being.
Sure, ma'am.
Step go back. Next step number another plus करवाना.
मल्टीप्लिकेशन થઈ ગયું બરાબર.
Good evening, everyone.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir. Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening.
Everyone, please
Kindly
mute
keep your
yourself. It's a
audios on
request.
mute, please. Kindly keep your audios on mute. Good evening.
Sir, I would say better the host has the option to mute all the participants. So it would be better if you will mute all the participants.
Yes, sir. I know that we have the option of unmuting or muting the participants, but then we have to again unmute it at our end. What I'm saying is, let us be self-disciplined. If possible, later on we will resort to the other option. Keep your audios and mute. Now, for example, if the facilitator says good evening, now we are going to have about 1,000 participants. If each and every participant answers good evening, that doesn't make sense. So he says good evening. It's understood that the evening is good and everybody is enjoying. Okay. So only when you are specifically asked a question, that is when you reply. Otherwise, your audios will be on mute at all times. Suppose a question is specifically asked by the facilitator, and otherwise, by default, all the questions are rhetorical questions. You need not answer, especially to greetings like good evening, right? So please, I request everybody to keep your audios on mute. We can, of course, mute it from our end, but we would be resorting to that only if necessary. Thank you very much.
Unmute.
તે અવાજ ક્યાં ગયો આજે? મમ્મીને બી સંભળાતું નથી ત્યાં તું બોલતી છે તે ને કીટુ હાથે.
Please mute yourself, everyone. It's a request.
ಮ್ಯೂಟ್ ಅಂದ್ರೇನು?
Very good. મારો વર્કશોપ ચાલતો છે. અમારે સેમિનાર એટેન્ડ કરવાનો હોય તે 28.
Hello.
Please see to it that you don't do this scrambling on all. Please look to the. Good evening, everyone. We are starting a session on financial statement analysis, a workshop on financial statement analysis by Uma Krishna Shetty Institute of Management Studies and Research. So we have organized this 2-day workshop. To give you some basic information about how analysis is done, we have scheduled, like, we will resource person will first start with some 4 statements. He will explain you in short which 4 statements are the income statement, profit and loss statement, balance sheet, and cash flow statement. And tomorrow we are going to study in detail about analysis. So both the days, as I have told you, rules that you have after session completes. So there will be quiz session of maybe 10 or 5 or 10 questions. So you have to submit that. And once you submit, then you will be eligible for your certificate, e-certificate. So starting with resource person, a resource person is Dipesh Bhatia. He is a CFA candidate and also equity research analyst. His goal is to share knowledge in the field of finance. He has 11 years of work experience in capital markets and is currently working in Valiant Investments on freelancing basis. He is also a visiting faculty in various MBA colleges and teaching at various CFA institutes, subjects like equity research and financial modeling. So off to you, sir. Dipesh, you can start.
Hi guys.
You can start, Dipesh.
Okay. Hi guys, let's start with the today's session. That is financial statement analysis. Before coming to financial statement analysis, I will inform you about the fundamental analysis, basic ideas about the fundamental analysis. So, for doing analysis of any company, that first is a financial analysis, which I am going to do in detail. Also, like business and industry analysis, valuation analysis, management analysis. So the first, that is financial analysis. The main aim of financial analysis is to analyze the amount of an income the company earns, amount of profit it is able to retain for their shareholders after factoring in all the expenses, whether they are operating or non-operating. And it also involves the analysis of the amount of cash that the company generates from its operations and utilization of that cash, whether for investment or for debt purpose. Next, we have business and industry analysis. So that is basically involved analyzing the current situation of the industry in which the company operates and finding out the strength of the company in that particular industry. So that is also very important part for fundamental analysis of any company. Next, we have the valuation analysis. So valuation is nothing but to value any investment. Like if you want to value a car, value an equity, commodity, currency, you guys can do valuation of anything. So in our finance, we have two approaches for valuation that are absolute and relative valuation. Absolute valuation is nothing but the valuation based on the DCF valuation. In short, I can say financial modeling of the company. Next is the relative valuation approach. That is nothing but to compare that particular company with the peer, where that company stands in from valuation point of view. Next is most important part of which is management analysis, which nowadays every analyst is doing very well. So in that, they have to analyze each and everything about the management. Suppose you want to invest in a particular company, which is run by honest people who can trust with your personal money. So let's come to our main part, that is introduction to financial statement analysis. For that, we have contents. First, I will give you a brief about what is financial statement analysis. Then I will inform you about the rules. Then what are the primary financial statements and other information sources. And last is a financial statement analysis framework. Nothing but the steps, what steps you have to follow while analyzing, while doing the financial statement analysis. Let's come to one by one. First is the introduction. For financial statement analysis, we require the financial reports that are one of the most important sources of information available to any analyst, any individual, or any bank. You can easily get the reports from the company's website and analyze that. Next, you should have a strong understanding of the information which is provided in the company's financial reports, notes, and supplementary information. So guys, I will cover each and everything in detail, like what are the financial reports, what are the financial notes, what are the supplementary information which the company provides. So let's come one by one. On the left hand side, we have the financial reports which the company provides. In that, company provides its performance, means financial position, and changes in financial position, means you can compare company's current year performance with the last year, plus you can check the trend by looking all the financial reports of the company. And other information, what do you mean by other information? Many of the analysts does not depend on the company's financial reports. they interact with the other people also, like management, company's management, company suppliers, from where they are getting the raw material. Next is the customer. Who are the customers of the particular company's products? So every analyst interact with management, suppliers, customers, so that they can get good information about a particular company. And on the right hand side, we have to analyze each and everything. Like we have to do company's past performance, present performance, and what will be the future performance of the company. Accordingly, an analyst will give his view whether they should invest in a particular company, or suppose if bank is doing analysis of a company, whether they should lend that company, whether the company will be able to repay that or not. So this is the basic information about the financial statement and other information sources. As all of you are aware about these basic things, like income statement, that is nothing but the profits which we arrive after deducting the expenses from the total revenue. Next, we have the balance sheet. On one side we have the assets, and on other side we have the liabilities plus equity. So assets are nothing but utilization of funds which the company gets from sources of funds, that are liabilities and owner's equity. And the last statement, which is very important, that is a cash flow statement that is divided into three parts: operating, investing, and financing. So don't worry guys, I will cover each and everything in detail, what things we have to look in every financial statement. Last is the statement of changes in owner's equity. That is not much important compared to other three, but I will inform you in short. That covers, suppose company has issued some shares in a particular year, or suppose company has come with a right issue in a particular year. So that information you will get from the statement of changes in owner's equity. So this is the basic format which you are aware about. All the financial statement, financial reports, sorry. Income statement is also called as statement of operations and profit and loss statement. If you will see any report, sometimes you will find that they have written the statement of operations, sometimes you will get a profit and loss statement. And this income statement is for a particular year only. This is just for reference purpose, how the company gave. This is a screenshot of DMart company, which I will do the analysis of this company tomorrow in detail. So if you will see how the company has given the expenses, they have not bifurcated into COGS or SG&A or depreciation. Depreciation they have given, but COGS and SG&A they have not given into the detail. So from this information, an analyst has to adjust the financials of the company. Like in the revenue also, you can see they have included the other revenue part, so which is not the operating part. So that also I will cover in detail. So this is just the reference. And if you will see these notes are nothing but the financial footnotes. That also I will inform you in detail what company covers into that. Next is the balance sheet statement. That is nothing but the statement as on date. Means suppose company has started its business in the year 2000 and they have given the balance sheet of 2019. So as on 2019, where the company stands considering assets and liabilities part. So if you will see, on left hand side we have the liabilities and equity part, and on the right hand side we have the assets part. So on the left hand side, these are the sources of the funds which the company utilized for purchasing the asset or for investment purpose. And this balance sheet is also known as financial position and financial condition of the company. So again, for a reference, this is the screenshot of the DMart company, which I will analyze tomorrow in detail. what things you have to look while doing the analysis. So this is the main part. According to me, I believe that cash flow statement is more important compared to income statement or balance sheet, because I believe that if the company is not able to generate the cash flow, then that company won't be able to survive in the long run. As you can see at present, the situation of the many of the companies, like whoever has not sufficient cash, they are defaulting on their debt. So again, this is just for your reference purpose only, cash flow statement of the DMart company. So now come to the main part, which I was telling, that footnotes, that is nothing but the financial statement notes. In that, what the company covers, they will give information about the accounting policies, what policies they are following, what methods they are following, like depreciation method. Like we have two methods, straight line method, double declining method, and then we have different methods for inventory, that is FIFO, LIFO. So company will provide that detail into their footnotes. Then assumptions and estimates, what the assumptions company takes and estimates, like accounting estimates and all. And other thing is acquisition and disposition. Suppose company has acquired 10 companies in the last 10 years, so they will give in detail which companies they have acquired, how much they have paid, and how much synergies they are getting. And other part is disposal. Disposal is nothing but they are selling their assets, or they are selling some part of their business, so that they will cover under disposal, which is also known as discontinued operation. Next is the legal proceeding. If suppose some case is going on particular company, so they will give in detail about that in legal proceeding. Next we have the employee stock option, which is nothing but the ESOPs, which they have given to their employees and other benefits. And last, which is the most important, that is the business and geographic segments. Like suppose company is selling 5 products, so they will give in detail about their products. What are their products? Like based on the geography wise also, if they are having the business outside India also. So they will give in detail how much percentage of revenue they are generating from that particular geography. So again, this is just for a reference. As I told you that in the income statement and balance sheet, we have found that there was written note to note 25 and note 26. So this is the detail. What things are included? Like in this current liabilities, you can see there are 2 things which are covered under other current liabilities, like revenue from operation. They have included like sale of goods on accrual basis. So in detail, you can find out other income, which I was telling, which is the non-operating part of the company. So you can exclude that thing from the revenue, and you can include that into the non-operating thing part. This is the MDA section, which is nothing but the management discussion and analysis part. Company gives each and everything about the detail. Means management discuss about the economy, how the economy is performing. Next, they will cover about the industry in which they are industry. Like suppose if you are tracking Maruti, and you will find out in the Maruti's annual report what is the outlook for the particular industry. Then they will discuss about their businesses, how their business has performed till now, and what are their plans, future plans. Like you can see now at present, every company is facing problems. Okay, so how they will go with this situation, how they will come up with the new ideas and new strategies. So they you can find out each and everything in the MDA section. And if you want to track how the management is, means how you can rely on a particular management, because not a single management will give you a negative information about a particular company. So what you can do, you can take out the approximately 5 to 6 years of annual reports of the company, and you can check whether every year whatever the management has mentioned in the MDA section, they have achieved it or not. So that thing you can check, and you can rely on the management comments. Again, this is the reference part which you will find out in the company's annual reports. Like you can see, first they have given the economic overview, then they have given the outlook about the economy, then they have given on the right hand side industry overview, including the opportunity and threats. So many more things you can find out. This is just the first page I have covered of MDA section. Next is the auditor's report. In every company, we have independent auditor, which does audit of the company related to the financial statements which the company provides. So every year, independent auditor has to audit the company's financials, and they have to submit the report. And after examination of financial reports, they will provide one report in which you will find 3 opinions. Means any of these 3 opinions. Like first is the unqualified opinion. Suppose auditor has completed his audit of the company's financial, and he has not found any simple mistake or any misstatements or anything immaterial things in the company's financial. So they will issue unqualified opinion. मतलब company में कुछ भी problem नहीं है. Each and everything is fine with the company related to financial statements only, nothing else. Next we have qualified opinion, which is nothing but some misstatement or exception to accounting standard. Suppose company has not followed one of the accounting standards, so they will give qualified opinion, and they will mention each and everything in detail why they have given the qualified opinion. They will mention that according to us, this company has not followed a particular accounting standard, so then they will give qualified opinion. Last is the adverse opinion. In that, what the auditor will mention that company has not followed the accounting standards, and all the financial statements are materially misstated. मतलब पूरा का पूरा झोल है. We are not responsible for anything. That's why we are giving adverse opinion for a particular company. This is again just the reference. You will get the company's auditor's report in the company's annual report. These are the other information sources, like company come up with the quarterly results every quarter. So that quarterly reports are not audited by the auditor. So clearly you will find out one statement about the income statement or balance sheet that these financials are not audited. So auditors audit only the annual reports. Next is the proxy statement. Proxy statements are nothing but the statement means one form which the company provides to shareholders. Suppose company is conducting annual report, annual general meeting. So in that they have to take certain decision related to, suppose they have to increase the director's compensation, management compensation, or suppose some conflict is going on between the management board and shareholders. So regarding that, they have to discuss, and they want some vote from the shareholders. So they will give one proxy form. Suppose if shareholder is not able to attend that meeting, that shareholder can send to any of his friend or any of his relative in the meeting. And he will mention each and everything in that form, that on my behalf, my friend is coming, and his you guys can consider his vote in the meeting. So that is nothing but the proxy statement. Last main part means I can say what are the steps which a normal investor or analyst has to follow while doing the financial statement analysis. Let's look one by one. First is the state the objective and context. Suppose there are three persons which are analyzing the company's financials. First is the investor who is analyzing the company's financial reports for investment purpose. Next, we have the analyst who is making the report for their clients. And another person who is a bank who is analyzing the company's financial for lending purpose, means whether they should lend amount to that particular company or not. So everyone's objective is different. So first you have to find out what is your objective for analyzing purpose. Next, you have to gather the data. Like you have to collect the financial reports of the company from the company's website and other financial data. Like if you want to find out the industry related data, that you will not get each and everything from the company side. So that you have to take out from the other sources. So you have to gather the data related to analysis purpose. Or plus you can discuss with the company's management, suppliers, customers. So why most of the analysts discuss with the management? Because sometimes what happens, management will mention something different in their books, and sometimes they will mention some comments while discussing with a particular analyst. So that thing analysts can catch and they can mention in the report. Next is the process the data. Now you have collected all the data, okay, and you will not get the data which you want from analysis point of view. So that thing you have to analyze. Like I have shown you this DMart's income statement. Company has not given separately how much is the cost of goods sold, how much is the selling general and administrative expense. So that thing you have to separate it, and you can find out how much will be the gross profit of a particular company, how much will be the operating profit of the company. Like that, you have to process the data. Another thing is common size statement, which is nothing but you can find out the trend of a particular company. Next is the ratios. Ratios also company will not give you directly. So that you have to calculate the ratios. Next is the analysis. Analyze and interpret the data. After adjusting all the financial statements, you have to analyze the trend, analyze the things, find out the trend, note down the parameters for analysis, and accordingly you can make the report, which is the next part of our step. That is the report, the conclusion, whether you should buy that particular company or you can avoid that particular company. Suppose if analyst has made the report, in that he will mention that according to us, we should avoid this company because of so and so points. So in the report, you will find each and everything why you should avoid that stock. Next is the update the analysis. So investing in company is not a one-time investment, which we guys do like in a bank. We have done the fixed deposits in the bank and directly we will look during the time at the time of maturity. So investment in a particular company is not like that. So we have to update that analysis part each and every quarter, or I can say each and every month, because if you will go through the company's website in the press release section, every alternate day or every day company come up with some press release, so you can find out the data related to your analysis point of view. So now come to the financial reports of the company. That is first part, that is income statement. These are the contents of the income statement. Income statement provides the financial results of the company's business activities over a period. So income statement is over a period. Means this statement is for a particular year only, not as we have seen in the balance sheet. In the simple terms, I can say income statement is nothing but your revenue minus expenses, which is nothing but your net income. So income statement is also an important input for valuation of models. These are the components and simple format of income statement. So you might be thinking, what is the difference between revenue and net revenue? So the difference is that suppose company has sold the products, okay, and after some time, means after some days or after some months, some customers have returned their products. Next is your COGS, nothing but your cost of goods sold. Then we will get the gross profit of the company. So this is simple format of the income statement, which you guys might be aware. So let's come to in detail, like the revenue recognition. That is a very most important part. A firm should recognize the revenue when it has transferred a goods or service to a customer. So suppose a company has sold the products on cash, but they have not delivered the product. So company cannot show that part into their revenue. So company has to follow the accrual accounting principle. That means company can recognize the revenue when they will earn. Means when they have delivered the products, when they have transferred that risk of the product to customer. Only that they can show that part as a revenue. Next, we have the expense recognition, which is nothing but the economic benefit which the company gets during the accounting period in the form of outflow or depletion of assets, like depreciation we have, incurrence of liabilities, that result in a decrease on the in equity, because net income part will go directly into the equity, that is a part of retained earnings. Next is the matching principle. Every company has to follow the matching principle. What it means, suppose company has generated the revenue of 10,000, okay, and company can show expenses which are related to that revenue only. They cannot understate or overstate the expenses. So they have to follow matching principle. Next is the periodic cost, which is nothing but your administrative cost. Means whether company generates the revenue or not, they have to incur that particular cost in a particular year. Like you can say, in this quarter, that means April to June quarter, many of the companies will not generate revenue, but their expenses are going on, like rent expenses. Company has to pay rent whether they generate revenue or not. Interest expense on their debt. No doubt, our RBI has allowed to defer the interest expense, but they have to pay after getting lifted of the lockdowns. So these periodic costs are nothing but they have to incur whether they generate the revenue or not. So let's come into the detail. That is cost of goods sold. So most of the company follow three methods. Any of the method they can follow, but according, if suppose some company is following GAAP, so they can follow FIFO. If company is following IFRS standard, they can follow the LIFO standard. So let's come into the detail of each and every method. First is the FIFO method, which is nothing but the item first purchased are first to be sold. That means under the COGS part, company will show expenses, means cost, of the inventory which they have purchased at the first, and at the end means inventory whatever is left after utilization of that inventories, they will show under the ending inventory. And next we have the LIFO method, that are nothing but the items which are purchased later, that will come under the COGS part, and whatever they have purchased earlier, that will come under the inventory part in the balance sheet part. And last is the weighted average methods, that are nothing but the whatever inventories they have bought, they will find out one average cost and they will show in both COGS also and ending inventory also. Next is the depreciation expense. Depreciation expense is nothing but the company charge on their long lived assets. Like suppose company has bought some machinery, so they will charge some depreciation every year. They will not show overall means total expense. Suppose if they have bought at the rate of 1 lakh rupee, so that 1 lakh they will not show in one particular year, because company will get the benefit from that particular asset over the period. So that allocation of cost over an asset's life is known as the depreciation, which the company charge on tangible assets, and the amount which the company charge on natural resources, that we called as a depletion. And another is the amortization, which the company charge on intangible assets. So let's come into the detail about the depreciation. So there are two depreciation methods. First is the straight line depreciation method, which is company recognize an equal amount of depreciation expense every year, which most of the companies follows. Next, we have the declining balance method, which is nothing but the double declining balance. Means compared to straight line method, in the earlier year of the asset, company will charge higher depreciation. Let's take the example of the entertainment companies. Whenever that company release one movie, so in the first week of the movie, company will generate collection of that particular movie will be higher compared to the later weeks. So company has to incur higher depreciation cost at the earlier years. So most of the entertainment company follows the declining balance method. So depreciation amount will get reduced every year, because company generates higher revenue in the early years, and after that they will generate lower revenue, and accordingly their depreciation expense will also get low. So let's come to the part of how they calculate. Straight line depreciation is nothing but the cost at which they have bought minus the residual value divided by the useful life. So simple it is, and most of the company follows this method only. Next is the declining balance method. The formula for the same is 2 divided by useful life multiply the cost minus AD. AD is nothing but your accumulated depreciation, which you will get in the balance sheet part. So in declining method, you will get one constant rate of depreciation percentage that the company will apply every year. Next, we have the amortization expense, which the company incur on the intangible assets. Intangible assets like franchisee agreement, trademarks. So on that, company recognize the amortization expense. Most of the firms use the straight line method. There are no different methods for calculation of the amortization expense. So financial report purpose, they follow the straight line method only. Next, intangible asset we have, that is indefinite life, that is the goodwill. Company are not allowed to charge amortization on goodwill. So company has to check, means has to test impairment of the goodwill. What do you mean by impairment? Suppose when the company has bought one particular company, A has acquired the B. Okay, during the time of acquisition, they have paid goodwill of amount, let's say 100 rupees. Okay, So they have paid 100 rupees because of the synergies what they will get in the future from that particular company. Now let's say 2 years has passed. So whatever they have discussed, means whatever synergies they have discussed, that they will be able to generate that particular synergy from that company. If the company is not able to generate that synergy, then company may charge impairment on that goodwill. So the goodwill amount will get reduced from 100 to, let's say, 80. So they check every year about the impairment of the goodwill. Next, we have the non-recurring part, which is nothing but the non-operating items. Like two items we have: discontinued operation and unusual or infrequent items. Discontinued operation, nothing but the company dispose of the assets or dispose of a particular product. So company will show separately below the net income, net of tax from the discontinued operation. And another part is we have unusual or infrequent item, like suppose company generates the income or losses from the sale of asset or part of business. So they will show under the unusual or infrequent item. So these items are included in the income from continuing operation, but these are the non-recurring items. You will not find these items every year. In every year company's financial reports. Let's take one example for discontinued operation. On the left hand side, we have the financials of the company without the discontinued operation. Suppose company is selling 3 products, A, B, and C, and they have generated the revenue of 10,000 total. And they have incurred the expense, total expense. This is just a simple example, just explanation purpose for discontinued operation. So company has generated the net income of 2,000. So margin will be 20%. Now come to the discontinued operation part. Means company has sold this C product. So now they have 2 products, A and B. So let's see the impact on their financials. The company's revenue has declined to 9,000. So if you will compare with this financials, the revenue has declined only by 1,000 rupees. So now come to the main part, that is expenses. Expenses, total expense earlier was 8,000. Now that has declined by 1,500. So if you will compare with the revenue has declined only by 1,000 rupees and expenses has declined by 1,500 rupees. So because of that, company's margin has improved 28%. I hope this simple example has cleared you about the discontinued operation. So after this net income, company shows that net income from the discontinued operation, that will be a loss around, because revenue has declined by 1,000 and expense has declined by 1,500. So company will show the loss from a particular discontinued operation. Next, we have the other comprehensive income part. This is what, suppose some companies are into commodity business. Okay, so they have entered into the derivative contract. They have done some hedging related to currency, related to particular commodity, oil, you can see. So from that particular hedging, they generate some unrealized gain and losses. And suppose company has done some investment which they have not sold. That means unrealized gain or loss they have. So all these unrealized gain and losses, they will show under the heading of other comprehensive income, which is below the income, net income. That will not impact the company's net income, because sometimes company might have huge losses, because of which their net income will get impacted. Sometimes they have huge gains also, because of that their net income will shoot up. So that thing should not happen. So because of that, only unrealized gain and losses from hedging derivatives or from investment, they will show under the heading of other comprehensive income. When they will realize that gain, that part will come under the part of net income. Next, we have the earning per share. That means how much company is earning on one particular share. This EPS is divided into two parts, which I can say the simple capital structure we have that contains no potential dilutive securities like convertible debt or convertible preference shares. Next, we have the complex, where we have the convertible securities like convertible preference shares, convertible debt we have. So that is a bit complex thing. So let's come to one by one. First is a basic EPS, which does not consider the effect of any dilutive security in computation. So the formula is simple: net income minus preferred dividend divided by weighted average number of common shares outstanding. So if you will look that we have deducted the preferred dividend in the numerator, because company does not include the preferred dividend anywhere in the line items of their profit and loss account. So because of that, we have to deduct preferred dividend from the net income part, and that we have to divide by weighted average number of common shares outstanding. Next, we have diluted EPS, which is nothing but company has some convertible debt or some convertible preferred stock. Because of that, their EPS has declined. Suppose, yes.
Dipesh, sorry to interrupt you. Just see options where your screen you are sharing. No, there is option known as click there more. There you can just disable attendee annotation, because continuously someone is scribbling. Please do that option, disable attendee annotation.
Yeah, done.
Done?
Yeah.
Thank you so much.
Okay, let's continue for the diluted EPS. Yes. Diluted securities are like the stock option, warrants, convertible debt, or convertible preferred stock that will dilute the company's basic EPS. Suppose company's basic EPS is 10. After considering the effect of dilutive securities, that means suppose if that convertible debt or convertible preference shares are converted into the equity shares, so how much will be the dilution impact on the EPS? So for example, basic EPS is 10 and diluted EPS will be let's say 9.5 or 9 rupees. So that will be the effect which will be visible in the diluted EPS. Next, we have the anti-dilutive security. Sometimes what happens after doing the conversion of debt or conversion of preferred stock, our EPS might increase. In my example, suppose basic EPS was 10, and after converting this debt and preferred stock, our EPS has increased instead of declining. So that we call as an anti-dilutive security. Let's see the formula for calculation of the diluted EPS only. In the numerator, we have net income plus convertible debt interest. Why we add back to convertible debt? Because while calculating the net income part, we have considered the interest expense. Because of that, our net income has declined. So because of this reason, we have to add back convertible debt ka interest. And this 1 minus t, why we do 1 minus t? Because of the interest expense also, company is saving some part of tax, because that profit before tax has declined because of the interest expense. Okay, if you will remove the interest part, our profit before tax will increase. So accordingly, our tax will also increase. So because of the interest expense, company some part of the tax. So because of that, we take here interest net of tax. And that both things we divide by weighted average shares, means that are normal equity share plus shares which are converted from preference shares plus shares which are converted from convertible debt. If you will see the formula of basic EPS, here we have deducted the preferred dividend. So here we don't have to deduct preferred dividend because we are calculating the EPS for preference shareholders also. That's why here we have to add the convertible debt of interest part also. Now let's come to the main part, that is the balance sheet part, which is nothing but the company's position as on date. These are the main components of the balance sheet. This is a simple fundamental equation, that is assets equals to liabilities plus equity. As I already mentioned that on the left hand side we have liabilities and equity part, and on the right hand side we have the assets. That means liabilities and equity are nothing but the sources of the funds for the company, which the company utilize that to invest in the assets. So this balance sheet provides the company's resources and its sources of the capital, that is nothing but your liability and equity part. So different items of assets and liabilities may be measured differently. What it means that some of the assets part, company mentioned that asset at cost. Some of the assets like investment, they will show at the fair value. How much is the fair value of that particular investment on the balance sheet? So that's why it is written as different items of assets and liabilities may be measured differently. So these are the main components of the balance sheet. Assets which the company owns, and they are the resources that are controlled by the company as a result of the past event, and from which the company future economic benefit are expected to flow to the entity. Like I mentioned that suppose company has bought some machinery. So company will not generate the revenue from that particular machinery in one particular year only. So they will generate over the years. So they will generate the cash flow from that particular asset over the years. Next, we have the liabilities which the company has to pay. They have to pay to their debt holders, or they have to pay to their creditors. So these are the part of the liabilities. Next is the equity part, which is nothing but your assets minus liabilities. So equity part is a bit lengthy, that covers common stock. Then we have the additional paid-in capital and the retained earnings. Retained earnings are nothing but the reserves which the company has till the date. So as per the IFRS and US GAAP, firms are required to report its current and non-current assets and liabilities separately. This classification is known as classified balance sheet. So this is just a simple format of our balance sheet, that is as on date. On the left hand side you can see we have the assets, and on the right hand side we have the liabilities and equity part, which is our based on our fundamental equation. So guys, just give me 2 minutes. I'm starting once again in 2 minutes.